Today, September 24th, 2025, silver is delivering one of the biggest shocks we've seen in years. The price has surged toward 14-year highs, and momentum is building. Many investors are asking, what comes next? In this video, we'll break down what just happened, what experts are saying, and the most likely scenarios over the next 72 to 96 hours. By the end, you'll understand the real drivers behind silver's sudden surge, the risks, and the opportunities. Disclaimer: this video is for educational and informational purposes only. It is not financial advice. I am not a financial advisor. Always do your own research and consult with a licensed professional before making investment decisions. All information presented is based on publicly available sources as of September 24th, 2025. The current breakout. What just happened? As of this morning, silver trades in the $43.80 to $44.40 range. That means silver is holding near levels not seen in 14 years. According to market reports, silver has already gained over 50% in 2025, making it one of the best-performing major commodities. So, why now? Several forces converged. First, Federal Reserve expectations. The U.S. Federal Reserve is expected to cut rates in October. Futures markets are pricing in a 90% probability of a cut. Lower rates reduce the appeal of the U.S. dollar and make silver, a non-yielding asset, more attractive. Dollar weakness. The U.S. dollar index recently recorded its sharpest decline in decades. A weak dollar boosts demand for commodities priced in dollars, including silver. Industrial demand and supply constraints. Silver is not just a precious metal. It is essential in solar panels, electronics, medical technology, and electric vehicles. The Silver Institute and several mining reports show that supply deficits are persisting while demand keeps climbing. Safe haven flows. Investors are nervous about economic slowdown, global tensions, and equity market volatility. Silver is seen as both an industrial metal and a safe haven, drawing double interest. Technical breakouts. When silver crossed the $42.70–$43 resistance area, automated trading systems and momentum funds piled in. That created a wave of buying pressure. This mix of fundamentals, technicals, and psychology is what pushed silver to today's levels. What experts are saying right now. Analysts and institutions are weighing in with very different views. HSBC raised its silver outlook, pointing to stronger demand from both investors and industry. Deutsche Bank upgraded gold forecasts and, in line, lifted silver targets to around $45 for the short term. UBS issued reports suggesting silver may test all-time highs if momentum continues. Some independent voices are even more bullish. Keith Neumeyer, CEO of First Majestic Silver, continues to argue silver could eventually see $100 per ounce, though that is a long-term view. But not everyone is convinced. Technical analysts at FX Street note that silver is entering overbought territory. The RSI is flashing levels above 70, often a sign of stretched momentum. Others warn that Fed officials could shift tone at any moment. If Powell signals caution on inflation, expectations of a cut could weaken, putting pressure on silver. Some traders believe that at $44, profit-taking is inevitable, which could pull silver back towards support levels before another attempt higher. The bottom line, the majority lean bullish, but contrarian caution remains strong. Technical levels to watch. Charts matter, especially in markets moving this fast. Immediate resistance, $44.40 to $44.50. If silver closes above this area, the breakout could extend quickly toward $45.20, then $45.75. Support 1, $43.70. This is the first zone where dip buyers may step in. Support 2, $43.12, aligned with the 50-day simple moving average. Major support, $40.60. Losing this would signal trend damage, but currently silver is far above it. Indicators: RSI is elevated, signaling strong momentum but risk of overextension. Moving averages confirm an uptrend. The 50 SMA is rising and the 200 SMA is well below current price. Candlestick patterns: Small-bodied candles and doji formations near $44.40 suggest hesitation. Key takeaway: 44.40 is the line in the sand. Break it and silver rallies. Fail and we consolidate or correct. What could happen in the next 3 to 4 days? Why are the next 72 to 96 hours so important? Because multiple catalysts converge this week. U.S. economic data, durable goods orders, GDP updates, core PCE inflation, and unemployment claims. These numbers will shape expectations for the Fed's October meeting. Federal Reserve speeches. Jerome Powell and other Fed officials are scheduled to speak. A single line suggesting caution on inflation could cool the rally. Global risk events. Weak manufacturing data from Europe or Asia, new geopolitical headlines, or unexpected shocks could push safe haven demand higher. Dollar index moves. A further dollar decline could turbocharge silver, but a rebound in the dollar would act as a ceiling. Physical demand. ETF inflows and industrial orders continue to surprise analysts. A spike in demand could reinforce momentum. Scenarios for the next 72 to 96 hours. Let's break down the 3 most realistic scenarios. Scenario A, bullish breakout, 40 to 50% probability. Silver breaks $44.44 with conviction. Buying accelerates, targets $45.20, then $45.75. Momentum funds join, retail enthusiasm rises, and institutional upgrades add fuel. Scenario B, sideways consolidation, 30 to 35%. Silver fails to close above resistance. Price chops between $43.20 and $44.40. Traders take profits, but no major breakdown occurs. Scenario C, pullback, 15 to 25%. Strong economic data or hawkish Fed commentary triggers a reversal. Silver drops toward $43, possibly $42.50. Momentum traders exit quickly, leading to sharp swings. Most experts lean towards Scenario A, but B and C remain possible. Risks that could change everything. Markets are never one-directional. Here are the red flags. Inflation surprise. If core PCE or CPI shows inflation heating up again, the Fed could delay cuts. Hawkish Fed language. Powell hinting at patience or caution could shift momentum. Dollar rebound. A sudden reversal in the dollar index could cap silver. Profit-taking. At these levels, even a small wave of selling could snowball. Liquidity issues. Thin market sessions could exaggerate moves. How to approach this market? Educational only. This is not financial advice, but here are some general educational points. Use small test positions rather than going all in. Stage entries. Scale in rather than chasing. Stop-loss protection is critical. Don't risk more than you can afford to lose. Short-term traders should use tighter risk controls. Long-term holders may be able to withstand volatility. Silver is volatile. Treat it with respect. Final recap. Silver is holding near $44, its highest levels in 14 years. Drivers, Fed cut expectations, weak dollar, strong industrial demand, and safe haven buying. Resistance, $44.40 to $44.50. Support, $43.70, then $43.12. Scenarios: breakout toward 45 plus, consolidation, or a pullback. Risk, data, Fed tone, dollar moves. The next 3 to 4 days are decisive.
Once again, this video is for informational purposes only and should not be taken as investment advice. Markets are volatile, and you are responsible for your own decisions. Always verify information and consult with a qualified financial professional before making investment choices.